This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining me on Stockbox today is Rob Scott, the CEO of Agulhas Group Africa, listed on the LSE as AAA, and also he is the Executive Director of AGA. So, hello Rob, how are you?
I'm wonderful in yourself, Mark.
Yes, I'm very well, thank you, Rob. And where are you talking to us from today?
I'm based in Johannesburg, sunny Johannesburg at the moment.
In Johannesburg, sunny Johannesburg. Great. Okay, good.
Yeah, exactly.
Good. So, what is the story then with the company, Rob? I understand there's a process going on in RTO into the Comarco Group, which is a port in Mombasa. But, can you give us some sort of background and history of the company and what's going on?
Yeah, certainly, Mark. So just a bit of history, and we're going to have to go back a couple of years. Mm-hmm. AAA, which is Anglo-African Agriculture, which is currently listed as a standard listing on the LSE on the main board, originally acquired many years ago a agricultural processing business, a spice business, in fact, in South Africa, which it's owned for probably about 8 years. About 3 years ago, in fact, probably a little bit more, about 3.5 years ago, I joined AAA as the executive director, and we did a strategic review on the understanding that we had a reasonably smallish spice business in South Africa, and we had a listing in London, and we needed to do something more. We either had to sell the business, delist, or buy something else. And it just so happened that as part of the strategic review, one of the businesses that came into our horizon was a company called Comarco Group, which is basically a company. It's about 40 years old, based in Mombasa, Kenya, and they operate one of the 2 private ports in Mombasa, and they operate a fleet of vessels, specifically barges, cranes, mm-hmm. Tugs, landing vessels, and the like, and do quite a lot of work not only in East Africa but around the world, and it just made a lot of sense for us to actually do a transaction. So in about November 2018, we advanced a loan of $1 million to Comarco, and signed an agreement for the ultimate reversal of Comarco Group into AAA. And the reason there was a reversal is, AAA's got a market cap of probably $2 million, and the transactions, and it's based on NAV, is probably about $25 to $28 million. So, there was a substantial difference in size. And so we started the DD in early 2019, mm-hmm. A full financial and legal DD. It took a while because the businesses, were firstly private. So, there was a bit of housekeeping and cleanup to do. And eventually, sort of in mid 2019, accounts were audited. All the legal DD was done, and we actually had a fit for purpose entity that we are going to reverse into AAA. And part of the reversal process is, after the reversal or the RTO happens, we will change the name of AAA to AGA, standing for Agulhas Group Africa. And the reason Agulhas Group Africa is the majority asset would be a marine based asset with both vessels and a port. And Agulhas is the current in East Africa, and we just thought it would be an apt name. So the name AAA would end and would be called AGA to reflect more the marine side of it. And then we started 2020 with huge gusto to raise cash and put the transaction to bed, and we were hit by COVID. So for literally the whole of last year was a holding pattern. I think we've hit 2021 with equal gusto, and certainly the markets are a lot better. Mm-hmm. We certainly there's talk about another commodity super cycle, which obviously has a huge impact on Africa generally. And the FID, the fixed investment decisions, have been made on the Rovuma Basin gas, which is ENI, Chevron, and Total. And according to Standard Bank, there's commitments for $125 billion, which will make northern Mozambique the largest construction site in the world for the next 5 years. And it's terribly exciting for us because from a sailing perspective, we are about 3.5 days sailing from Mombasa versus 10.5 days sailing from Maputo. So certainly it makes a lot of sense logistically to use us as a transshipment point, just because of the vessels that we have, which are suited for doing that type of work. And one of our large tugs and barges can take 10,000 tons, which is the equivalent of about 400 trucks. And it does make a difference from a logistics point of view. So yeah, we're terribly excited, and hopefully starting to get to the end game, which has been, from our perspective, a fairly long and arduous process.
Okay, so effectively then, when this RTO happens, the company will become known as Agulhas Group Africa, or AGA, on the LSE, London Stock Exchange, and you will effectively own the port, some of the port operations of the Comarco Group. Is that right?
That is quite correct. And not only the port operations, the port consists of both leasehold and freehold. So that would be part of AGA as well. So not only the marine assets, but the leasehold and freehold of the physical port in Mombasa.
Okay. And what kind of operations then will you be undertaking? I mean, you mentioned there about the big construction project there in Mozambique. So will a lot of the shipping be going, Mombasa to Mozambique?
Well, look, I mean, we certainly hope so. I mean, obviously there's a limitation size. So what will the port do? I mean, we've obviously got the marine assets. Currently our marine assets are used to do dredging. They're helping Fujita do the piling for the bridges in Mombasa. They are, have been used in South Africa. They've been used in United Arab Emirates. They are going to be used to take fairly large baobab trees up to northern Europe. So, I mean, there's a multitude of items that they're used for. The port, interesting, was an EPZ, and about a year ago, and maybe a little bit more than a year ago, we changed the designation from an EPZ, which was really just an export orientated, to that of a designated port, which allows us to both import and export. There's a limitation of what we can do. Containers generally are the domain for the Kenya Ports Authority, for the main port in Mombasa. But we can do break bulk, we can do transshipments. And I mean, we started about a year ago, in fact, over a year ago, 1.5 years ago, exporting iron ore that was brought through. We imported coal last year, and we're going to continue importing coal. So it's bulk commodities, break bulk that we can bring in. And basically, it's a fully fledged port except for containers, which are the domain of the KPA.
So from your point of view then, as an investment proposition, from your point of view, I'm not talking about shareholders at the moment, but from your point of view, you clearly feel it's a very good investment proposition to be getting involved with this. And from what I know about Kenya, I know a little bit, but it's certainly a good mining jurisdiction, and there's a lot of infrastructure going on as well. There's some very fast trains that have gone in, a lot of about 750 kilometers of rail line that goes to Nairobi, to Kisumu, to the port of Mombasa. You talk in the RNS about a soon to commence project on a harbour bridge as well, which will benefit both the port there as well. So, I mean, what's your opinion? I assume you feel it is a very good investment proposition for the long term to be getting involved in a project in the port of Mombasa.
The question is, Is it a good investment? And I think the answer, quite simply, Mark, is I think it is. I think there's a couple of reasons. Is the macroeconomic factors affecting Africa are definitely in its favor. It's come out of a 6-year slump, which is directly caused by the slump in commodities. The commodity prices are improving. If you take a look at coal, iron ore, copper, zinc, manganese, lithium, whatever product you're looking at, the only one probably is not as great is thermal coal, but we understand the reasons for that. Certainly with the LNG being built in northern Mozambique, I think that's also going to make a big impact on the area and Africa as a whole. So I think from a macroeconomic point of view, I certainly think that Africa is going to have a bit of a boom over the next sort of 5 to 7 years, maybe even longer. I think from a port point of view in Mombasa, because we're pretty close from a logistical level to northern Mozambique, the Afungi Peninsula, where they're building the gas facility, I think we're going to get quite a lot of business from that, just to supply to the project, which, as I mentioned earlier on, is going to be the largest construction site in the world over the next 5 years. And I think just generically, the extra income that we can get due to the fact that there's going to be a sort of boom or an improvement in the economics in Africa is going to be very, very positive for us. And I think, as I said earlier on, we don't want to be a one port wonder. We'd obviously like to grow our marine fleet. We'd like to grow our port presence across East and West Africa to take advantage of this very positive economic cycle.
Okay. Well, let's just finish with a thought on the company then, and perhaps looking at a sort of a value proposition there. I understand that the directors hold about 12% of the company, and you also did the CLNs recently, which has allowed you to raise about £603,000. So what might you say to potential shareholders, about why they perhaps should take a closer look into what will soon become AGA?
Okay. I think the actual business, the AAA/AGA, is actually an interesting investment thesis. One is the directors have actually committed a large number, or in fact, all their earnings have been converted into equity, because I think we actually believe that there's going to be quite a lot of upside. Secondly, the assets that we're acquiring in the short term are asset-based values, less a discount. And those asset values have been actually verified by third parties. In fact, the valuation is based on third-party valuations. So the values are not directors' valuations, they're third-party valuations. So you're getting the bricks and mortar at a discount in the first instance. And obviously those bricks and mortars are going to generate, in our opinion, a reasonable return that you can actually start re-rating the value of the business from a net asset value basis to a discounted cash flow basis, which obviously makes an impact in terms of the valuation. So, I think the mere fact that we have managed to raise funds, that certain of the directors all the directors have converted their earnings due to equity, I think shows a lot of confidence in the business. So, I think the thesis is good. I think the macroeconomic principles are good. I think the basis of the valuation and the RTO, the transactional metrics are actually pretty good. And I think as everything comes into place, it's going to be an exciting place to be. Okay.
Well, Rob Scott there, the CEO of Agulhas Group Africa, that's AGA. Thank you very much for your time.
Thank you.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.